You're listening to the Unmitigated Podcast, the podcast that brings to light the hidden risks business owners and entrepreneurs take every day that may not be covered by their traditional insurance. Here's your host, Van Carlson.
Hello, Van Carlson with Unmitigated Podcast. Thanks for joining us today. We got a special guest today. Brandon Kordower is joining us. Aura. I'm sorry. I'm really good at names today. From a CFO specialist. And Brandon, welcome for our Unmitigated Podcast. Thanks for joining us.
Thank you very much for having me.
So do you mind telling us a little about what you do for a profession and how this thing all got started and what you do?
Yeah, sure. So we provide fractional controller and CFO services to professional service companies. And the idea is that when a company gets to around $1 million in revenue, they should start to really look at pursuing accrual-based accounting, and they should look beyond just a bookkeeper to help them with their financial support, but to actually have a subject matter expert in assisting them with scaling and growing their business.
You know, we met, about a year ago, I want to say, down in Orange County on the beach. It was awesome. Bree, our marketing director, introduced us, and I was really impressed with you, Brad. I thought, first off, a couple things. Where were you when several years ago? That's one thing I would say I've been guilty of as a business owner is not taking my finance department serious. Unfortunately, I think a lot of founders or entrepreneurs, what do you want to call yourself, they kind of discount finances at the end. You got sales and then you got operations, and those are the two focuses, but the finance really needs to be in there. And I thought it was really great what you said. And then the fact that you said service. And so you focus on service industries. Is that right?
Yeah, that's correct. But I want to actually take it back a sec because I think you hit a really good point, which is that, I think for a lot of small businesses, they look at their accounting as an overhead cost, right? It's an expense they're incurring and they want to mitigate or reduce that as much as possible. Instead of considering, well, what value can I get out of my accounting beyond just preparing my taxes, right? And that's really what I want to help express to clients is that really your accounting can go beyond just that, right? The idea is if you want to really grow your business, become more profitable, we actually have to kind of drill down into the numbers to do so. And it takes some expertise, right? And that's where I kind of went back to going beyond the basic bookkeeping. But by doing so, you can really unlock a lot of interesting information about how to grow your business. And that's why I kind of started this company. And yes, I like to work in the professional services world. So it could be marketing agencies, engineering firms, architecture firms. These businesses have a little bit more complex accounting because it's project-based. And that's typically where a bookkeeper falls short. And that's where I like to hone in and specialize my business.
Yeah. And one of the things that you, when we were talking originally, you come more from a controller side of things, right? So, obviously a fractional CFO is nothing new. You do hear about those, but what I thought because I had some experience in this relating to fractional CFOs and mentoring CFOs and all that stuff is, sometimes there's a CFO that's really, really almost too strategic, and doesn't have the controller background. And I could see the differences in that. And I thought that's another value that I think your company specifically, because I think having a controller is kind of first maybe before a CFO, or would you say they kind of go hand in hand if you're going to have a controller versus, somebody more than just a bookkeeper?
Yeah, so I think it's good to kind of look at, well, what are some of the differences between bookkeeper, controller, CFO, right? So to me, bookkeeping is like data entry. It's your basic inputting of your financial data. It's seeing an expense hit and categorizing it, and it's seeing money come into your bank account and categorizing it as revenue. And then on the other side of the spectrum, to your point, you have the CFO or the chief financial officer, who's really strategic, forward thinking in the organization. What I find is that a lot of people try to jump from a bookkeeper to getting a CFO, but that piece in the middle is really important. And that's the controller. And so what the controller's job is to do is to really close the books, right? Perform that month-end close and performing on accrual basis to a high standard. Unfortunately, a lot of people try to jump the gun. They say, okay, well, I got a bookkeeper and I really need some more financial advisement, so I'm going to jump to the CFO. What they don't realize is that the CFOs don't want to be closing your books. They don't even want to be in the numbers. They just want to be doing analysis based on the information they're seeing, the financial information. And if you're having that done to a lower standard, such as a bookkeeper, well, you really end up in this garbage in, garbage out situation where the analysis and the strategy that you're trying to drive from the CFO is really lacking because they're not getting the adequate financial data in order to actually analyze and interpret where the business should be going.
Yeah, great. So from your perspective, when you're looking at, I mean, it's tough, right? I mean, human capitals, qualified human capital is hard to find, especially in the county. I mean, right, there's pretty big contraction going on in the world of accounting, right? And so we're, from a business owner standpoint, again, based on revenue and all that, but also maybe the complication of your business. I mean, there's a lot of things, a reason why you need to expand your Department of Finance, other than and then position yourself to grow, like you're saying. When would you go from a bookkeeper to a controller? And can a bookkeeper become a controller? How would you do that process?
Yeah, so unfortunately, I see this all too often where a company starts off with a bookkeeper and 10, 15, 20 years later, that company is much larger in size. And that initial bookkeeper, maybe they have a controller title, they have a CFO title. The problem, and not all the time, but most times, is that the level of sophistication needed as the business grows, you're having a bookkeeper that's still performing bookkeeper quality level. And what I mean by that is that, when businesses start off, they're cash basis, right? Which is money comes into your account, it's income, money leaves your account, your business account, it's an expense. And that works fine when you're small. Well, when the business starts to grow, a few things start to happen. Number one, you start to see how timing differences could take a real play on your financials, because when you're trying to analyze, am I profitable or not? You really need to get accurate financial data. And that often includes things like accruals, right? You have timing differences. Like a good one, for example, is payroll. A lot of people are on biweekly payroll, right? Where they're receiving a paycheck every other week. Well, what happens is if you just book that payroll every 2 weeks, you end up with 10 months of the year where you're underreporting your payroll expenses, right? Because there's more than 4 weeks in a month, right? You technically have 4 weeks and some. And then you end up with 2 months of the year where you have 3 pay periods. So you have 10 months that you're significantly underreporting, and you have 2 months of the year where you're very much over-reporting. And so when you're trying to drive decision-making, like, is this business profitable? Am I going in the right direction? Do I have the adequate level of staff? Do I need to make more investments in staff? That's just one small example of when you set up your accounting correctly and you do payroll accruals, well, that smooths that differences out. The thing is, you want to take timing differences out of your business. You want to see when you're actually generating revenue in your business and when you're incurring expenses in your business, regardless of when you're actually paying that money out or receiving that money in. And that requires that extra step that a controller really needs to bring to the table.
Yeah. So how do you find a controller?
That's a great question. And this is something that, unfortunately, my industry, in the accounting industry in general, it's not highly regulated, right? People could call themselves whatever they want. And what you see is you have a lot of bookkeeper level people calling themselves CFOs. And you have, controllers who maybe they are controllers, maybe they're not great controllers. And so what I would say is, when you're evaluating, okay, if I feel like my business needs a controller, well, you should do some diligence, talk to some of their clientele, see the kind of businesses they're working with. Do they understand your industry? Do they understand the nuances of your industry? And don't just ask them if they do and have them say yes. Why don't you ask them for examples of what makes your industry unique and what are some challenges that they, with their experience, could overcome for you, right? Do due diligence. This is really important because more often than not, the business owner is not financially savvy themselves, right? They're not deeply understanding accounting or can understand a balance sheet. So it's really important to do your due diligence into finding that right person who you can entrust to really take care of this position, because this position will take you beyond just the financial reporting. Also, as your business grows, you need working capital, right? So this person needs to be able to liaison with banks. They need to be able to liaison with your CPA or tax preparer. They need to be able to liaison in a due diligence situation if you're looking to sell your business. So filling this role with somebody who's competent is really important, but they also need to understand the nuances of your industry.
Yeah, so that's it's not easy.
No,
it's
not
easy. So okay, so let's say you're moving this train along. You got your bookkeeper now. By now, if you have a controller, I bet you probably have a couple bookkeepers, and now you're starting to build out your finance team. When it comes to a CFO, right? Is there some obvious times when you should say absolutely is the time to pull the trigger on a CFO? And then it gets back into fractional or not, all that good stuff. But what does that look like?
Yeah, I think that the bookkeeper is there for the day-to-day to get the things done. The controller is there to make sure you're getting that adequate close. The CFO really comes into place when you mentioned before the strategy, right? If you want to go from looking at, okay, well, how did my business do last month? And even beyond, because a lot of times the controller could just handle basic budgeting functions as well. When you really want to get strategic around capital raises, exits, around growing the margin of the business, around real strategic growth, that's when you want to really consider, okay, do I now look to a CFO? And once again, you have to do that diligence, because unfortunately, there's a lot of people calling themselves CFOs who maybe shouldn't have that title. And so you want to ask, like, what can you bring to the table? What can you help with me? Now, in the question of, does it make sense to outsource or have a fractional versus bringing it in-house? What I tend to find is that as businesses grow, those subject matter experts or the people that you want with the expertise, that's typically, it makes more sense to look at a fractional or to look to outsource that, because the reality is your business probably doesn't need that person full time, right? So even in the realm of a close, right, for what a controller does, you may be a $40 or $50 million business. You may not still even need somebody full time in that regard, because really what a controller needs to do is perform the financial close, make sure that they're doing all of the supporting documentation, and then present you the financials. And you think about, okay, a CFO needs to do even less than that, right? So I tend to like the fractional model, and I think it works really well because it allows you to really get a lot more expertise at a price point you can afford. Because what I don't recommend you do is say, okay, well, I have an $80,000 budget. Let me go find a controller that fits in that $80,000 budget, because what you're going to end up getting is you're going to get more of a staff accountant level work. Yeah, they maybe have a controller title, but they're not going to be giving you the adequate work you need, versus, okay, find somebody who's more expensive, but you're needing to use them less, but now you're having that expertise and guidance. Because like I said, along the way, a few of these jobs are really full-time. And when they truly get to full-time and you analyze that you need that, okay, then you can look to bring it internally, but you want to make sure you're paying adequate rates commensurate with the marketplace, because you don't want to bring in somebody lower level. You want to make sure this is someone who knows what they're doing, that has the skill set to match. And so really, but like I said, if your business is under $10 million in revenue, you definitely don't need a controller or a CFO in a full-time equivalency, in my opinion. You can have staff accountants handling the bulk of the day-to-day functions.
From a resume standpoint, trying to identify these folks, what would you look for on a controller? Is it experience? It's probably not necessary. I mean, it's accounting degrees, finance degree, whatever degree they went to school for. But is it really come down to experience and what they've done in the past?
I think experience is big. I think a lot of it too is, okay, so what size of a company were they at? What level of accrual? So in my opinion, if they're controller, they have to have a very strong level of accrual accounting, okay, which is different than cash accounting. And so what is their level of accrual? What is their experience doing accruals? Can they handle those are the things that you want to make sure somebody in this position will hold. Yes, having a degree is great, but I'll tell you, we'll bring somebody on. We'll bring people to work on with us day one with an accounting degree and they know nothing, right? Like the degree, it definitely gives you like a debits and credits understanding, but that's what a bookkeeper should understand is debits and credits, right? This really goes beyond this. And so I think work experience is important. I do think asking about what is their accrual understanding and getting some guidance with that as well. And really, if this is something where you don't have a good understanding, this is where maybe actually working with a recruiter makes sense. And I only say that because going back to, if this is not your area of expertise, don't hire for this position unless you really know what you're looking for, because you could get a wide spectrum of candidates and you may get somebody very personable, which is great, but they may not have the adequate skill set needed to actually perform this job to a high standard. Accountants in general, they're introverts. They're a little, they're strange,
You don't have to tell us, Brandon. Too much about.
Oh, for sure. But that's but so my point is you may get somebody who doesn't interview very well, but they actually have the skills for the job versus somebody who interviews great, but they're terrible at the job. And so I would advise, if you need to fill this position and you realize that, okay, maybe the fractional model doesn't make sense, you want to bring in-house, probably makes sense to go with a recruiter. I know there's a fee there, but you're working with people that understand the industry, understand your needs. And
then they have a network too, right?
Absolutely.
Yeah.
Absolutely.
That's worth it right there. So when it comes to, getting the three, moving this down the road, do the fractional CFO, you have a full-time controller or is there fractional controllers out there as well? Or is that doable or is that?
That's actually what my business is really.
Okay. That's what I thought.
Yeah.
I don't want to speak for you, but
no. It's less common. It's becoming, I think people are catching on that this is a gap that needs to be filled. So you're seeing it more and more. It's becoming more prevalent, but it is rarer to find fractional controller versus CFO. But I would say that if your business has a bookkeeper and you're looking to take it to the next level, start with the controller. Don't jump to CFO. You really need to take this in steps because, as I said, you're going to bring in a CFO. You're going to spend a lot of money for a CFO, and you may not get what you need out of the business because that CFO needs to be looking at accurate financial data to be driving any kind of decision-making or strategy with you.
Well, and I think to your point too, if you got a good enough controller in there, you as the owner, founder, or person that's got to run the company, you can start to understand your own financials too for a while before you really need to pull that trigger on a CFO, right?
I mean, absolutely.
Yeah.
There's a lot of
you should understand this stuff, right? I mean,
it's the type of thing where, I believe, look, let the business owner do what they do best, which is running their business in some aspect of their business. In the areas where you're not strong in, bring in subject matter experts, people that know what they're doing to kind of work with you in order to help grow the business. Because at the end of the day, we can't wear we're all entrepreneurs, right? We're entrepreneurs. We can only fill so many hats and we can only do so many things. Why struggle in finance when this is not our area of expertise, when we could be putting our focus into sales or strategy or growth, right? Other areas of the business where we're better suited. And let's bring in the people that know what they're doing to help make sure those aspects of the business are running effectively and smoothly, so we can then put our focus into the areas we should be in the organization.
One of the things that SRA we're focused on here in the last year is the merger acquisition world, which we've all kind of seen a big spin up of that. And that's really where we talk about this idea of the transfer of wealth that's going to occur in the next 10 to 15 years. And there's some crazy statistics out there that businesses that are looking to sell in the next 10 years, these are businesses that are people owned that are over 70 years old and they don't have an exit strategy to get out of, like tune of like 3 million businesses around the country. Wow. Big number. And when it comes to the services you guys are providing on that, I mean, those are critical times. If you're looking to sell, put it up for sale, or anything get a proper appraisal for your business, all those things, I would say it's critical. It really doesn't matter what size of business you're at that point. You need some really good expert financial reporting moving forward. Do you see a big spin up on that side of your business today?
Oh, absolutely. I highly suggest if there's anybody that's within 5 years of an exit, you absolutely need to be working with a fractional controller slash CFO. And the reason for it's a fewfold. You brought up some great points. Number one, you want to get your accounting in place. You want to make sure that when it comes to valuation, it's a correct valuation. You want to make sure that somebody's considering those EBITDA add backs, because a lot of people will throw expenses all over the P&L and then things get buried. And by the time you look for add backs, you can't actually find those add backs to properly value the business. A couple other areas as well is, we mentioned making sure that the valuation is up to snuff. The other is due diligence, right? You want to know that, okay, when your business gets valued at X, and then the selling party comes in and does their due diligence, that they don't poke a bunch of holes, because that's what they do, is they will come in and poke holes. If your accounting is done poorly, they will find all the reasons to say, well, you're saying the business is worth X. We're saying the business is worth X less 40% because of all these problems we're finding. And this is just us scratching the surface. If we go deeper, we're going to find more and more problems. And the reality is, if you just do things right, pay a little bit more money to have someone in there who knows what they're doing, they will come in and make sure things are clean. And I have a perfect test case for this. We had a client about a year and a half ago that went through a $16 million exit. I had started working with them about 3 years prior. Accounting was a nightmare. It was garbage. I knew that, they had expressed that they were looking to sell in 3 to 5 years. So we started working with them. We got everything cleaned up. They had gotten to the point where they were ready to exit. Well, by the time we got to diligence, we just provided all of our supporting documentation, which was all the month-end procedure workbooks, all the reconciliation tie-outs. And I was waiting to have a bunch of back and forth with them. Their team reviewed everything, and I had a 15-minute call just to go over a couple basic questions, and that's it. They got their $16 million valuation. And I think that really speaks to when you present yourself as professionals, and when I say you, I mean you business, right? When you convey, hey, we've done things right, we've done it professionally, the other side knows that, right? And so when their diligence team is reviewing the documentation, they can tell if it's done by people at a certain level. And it's about creating that level of comfort, whether it's in an exit, whether it's talking to a bank, right? Whether it's talking to an auditor. You want to show professionalism and convey that you know what you're doing, because guess what? It makes that process so much easier, whatever it is.
Well, it increases the confidence of the buyer drastically, I would imagine, right?
Absolutely. Huge. It's really, do you show that you brought in people that know what they're doing? And does the other team, can they sense that? And, it's one thing to present the financials. It's then another to then provide all the supporting documentation behind that, because you can make the numbers whatever you want to make the numbers. What's your support for that? What are the reconciliations you have? Are they done by people who know what they're doing? Or were these just hard-coded numbers to paint a rosy picture? That's all going to get, if you're doing it half-assed, it's going to be completely torn apart in diligence.
And rightfully so, right? I mean, if I was the buyer, that's what I'd be trying to do.
Absolutely. Yeah. I mean, my philosophy is you always go to the table and you anticipate that the person on the other side is looking to tear apart anything you're going to provide them. So you want to be as ready as possible with everything, all your T's crossed and your I's dotted, such that they have nothing they can say other than, okay, yeah, we agree. This checks off. Let's move on. Because then they can't start to negotiate with you. Then they can't start to say, well, we're not going to, we went in with this LOI. We're not moving forward with that. It works the same. And it works in the banking world that way too, right? So we, we work with a lot of clients to get large lines of credit or other forms of working capital. And just conveying that professionalism goes such a long way in getting comfort with the underwriters, moving forward with the lending process. It's really, people know, they can sense when things are done correctly. And it really just alleviates a lot of that headache and grunt work up front and gets you closer to achieving your goals from the start.
one of the things that, besides merger acquisition, a lot of these companies are out there that can acquire, right? I mean, the acquisition part, and it probably just as important, right? I mean, if you're going to go out and try to roll up other services that in your sector and other parts of the territory, your country, other states, it probably speaks just as heavily in selling it is to buy, right?
Oh, yeah, absolutely. I mean, so one of the services we offer to clients is we do a high level due diligence financial assessment, because we'll have people that come to us looking to acquire other companies, and they just want to get a sense, hey, can you just take a look at this for us, give us a sense of like how well this is being done. I mean, the reality is, and I'll be honest with you, probably 80 to 90% of the time, financials are done poorly out there. There's just, I think there's a lack of understanding, but I have to bring some of those things to the attention, because I want people to understand, just so you know, this is what you're getting into, and here's some of the strange anomalies we're finding. At the end of the day, if everybody was just doing things right, it would make this process so much smoother. But unfortunately, as I mentioned, unregulated industry, there's a big spectrum of quality you get out there. So really just make sure you're doing your diligence and finding the right partner to work with.
One of the things that, and I'll just talk about me selfishly right now, is when is a good time? It's a triggering to hire more staff. And one of the things that I get frustrated with, and you've already kind of hit on that, was it looks like it's not a profit center, it's an expense center, right? I mean, that's the perception of somebody like me that just, always looking to go and, we'll deal with the aftermath later kind of thing. I'm trying to calm that down, because I'm trying to minimize that. I know it can be a problem now, but that being said, is one of the things that, how do you put an ROI on a bookkeeper? How do you put an ROI on a controller, that kind of stuff? And it is one of those invisible numbers there that, or how do you say, hey, here's your Department of Finance CFOs, here's your budget for the year, and they come back and say, hey, I need more money because I need to hire another person. I know it's not an easy question. What triggers, or how does an owner feel comfortable saying, okay, yeah, you're right, let's do this? I mean, what's those triggers look like?
Yeah, I think it's really, there's thinking about the today of the expense, and then there's thinking about the tomorrow. And what I like to think about is, for myself and my organization, I look out 5 years into the future on where do I want to be 5 years from now? And then I reverse engineer that to figure out what am I going to need along the way to get there. And that planning process, and then it's not only the planning process, but then tracking, am I on goal to hit where I thought I was? That's really what's going to kind of give you some of that comfort to make some of those investments in the organization that you really have to make. But it's less comfortable when you don't have that long-term strategy and plan in place, and when you haven't been tracking along the way to see if you're getting there. If you're always in a position where you're reactive to, okay, now I've run into this issue, now I need to hire for that. Well, it's harder to consider that ROI versus if you planned for it accordingly, okay, hey, when I'm at this size, I'm going to have to make these investments. Okay, I'm tracking along the way. Yes, my overhead is going up, but I planned for this, and I've made sure that I had enough financial runway to get me there. And, okay, if I didn't have the financial runway, did I plan at certain places to get the working capital or other funding I needed to achieve those goals? It really comes in with the planning. And so what I would say is that from an ROI perspective, what are the long-term goals? If you are running the business status quo and things are working, okay, then run things as they've been working and run lean. If you're aspirational for growth or scalability or profitability, well, guess what? Before you can get really profitable, you're going to have to make some big investments in the organization and plan for that. Just see where you want to be out in the future. What is that BHAG or that big, hairy, audacious goal? And then reverse engineer that and see how you can kind of track and measure to that.
Well, I think you literally just described why you at least want a fractional CFO, because that's the strategic part you were just describing, right? The cash flow needs of the future and all that. You as a business owner, as a founder or whatever, you don't have this. To your point earlier, we don't have the skill set for that. So that's when a fractional CFO, like he can mirror, okay, here's where I want to be in 5 years. And he can mirror that with the financial needs moving forward and actually help you in step with that plan, is what I just heard you say.
So yes and no. Yes, it does. This is the type of work that a CFO should be doing. But in order to make sure you're measuring and tracking correctly, you're also going to need the controller. And so, that's where, for me, I blended both, right? Fractional controllers are core bread and butter, but we like to sprinkle some of the CFO for the strategy, because the reality is, if you're looking at the mix of how much do I need tactical versus how much do I need strategic, it might be 80% tactical, 20% strategic, whereas a CFO is really more almost 100% strategic. So I guess my point to that is, you need the controller to make sure you're actually truly measuring correctly along the way. You need a little dabble of the strategy to make sure that, somebody with the astute financial understanding can kind of take your long-term goals and put it in a way that's measurable and realistic. But then you need that controller piece along the way to actually measure and ensure that you're meeting that. Like I said, I've built my organization to mostly be controller with a sprinkling of CFO, because I find for small businesses, that's what tends to make the most sense.
Absolutely. No, this has been great, Brandon. So Brandon, if people want to learn more about you and how they can reach out to you directly, what's the best way to do that?
So you can reach out to me on my website, which is www.auracfo.com, AURACFO.com. And best to reach out to me on there. We're just starting to dabble into social as well, Instagram. So Aura CFO is our Instagram, where hopefully I'll be able to post some reels and give some good nuggets of information for those that want to learn a little bit more on the the strategic side of the business, as well as what are some tactical things that they could be looking at within their organization to help understand if their financials are being done accurately or not. And looking forward to helping whoever needs some guidance. And even if somebody wants to just reach out with an email, happy to just schedule a conversation, even just if I can help guide them or shepherd them in the right direction. Happy to do so.
Brandon, you're great. Thank you very much. Thanks for joining us today on the Unmitigated Podcast. Talk to you soon.